Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's take a look at some of the stocks on the move today. We can do that with Bloomberg's Christina keynote. Christina, what are you looking at?
We got to take a look at Intel, Paul. So ticker INTC, those shares extending. Opening declines, they are now down 16% on the day. And we know, of course, from their earnings report that first quarter projections for revenue and earnings well short of Wall Street estimates. But really the headline from that analyst call was all about their manufacturing problems, right? And, you know, the company's saying that they're not going to have additional supply of their lucrative server computer chips until the end of the first quarter, according to CFO Dave Zinsner. And really the issue is that it's just low manufacturing yields, right? The percentage of usable chips that they have coming out of their factories is slow. And so that's made it hard to fill their orders, which apparently the company says they do have a lot. And that, I think, speaks to their gain, their massive share gain over the past year. So it really is just a timing issue here. Bloomberg Intelligence saying, though, that I think the focus is now going to be on the timing of the recovery in their gross margins in the second half of the year and any additional proof points on external foundry traction. So we'll see. I mean, this just seems to be like a timing mismatch here.
Well, and the fact that investors got really excited very early on, and now we're waiting for the company to pull through to deliver. All right, P&G.
Let's take a look at P&G. Yeah, so ticker PG. Those are up about 0.8%, or pairing those actually 0.6% now. But we did get an upgrade for that company from JP Morgan. So analysts now saying that it is overrated from neutral previously. They also raised their price target to $165 per share, which implies a 10% upside from Thursday's close. So JP Morgan citing the P&G call, which apparently gave, quote, the much needed hope and much hope for reassurance that the company is on the right track. Now, to recap, it wasn't a particularly good set of earnings. They did see second quarter organic revenue missing average estimates and core EPS just in line with forecasts. But I suppose it's that reassurance for the future that's really giving JP Morgan an optimistic outlook here.
Capital One, what's going on there?
Capital One, so ticker COF, those shares are down now more than 4%. We did get their earnings as well this morning, fourth quarter adjusted EPS, missing the average estimate, and the firm also reporting higher than expected costs is probably related to their acquisition of fintech company Brex for about $5.15 billion. That's the biggest deal that they've made since they acquired Discover Financial Services last year, which is roughly around $35 billion. And so Bloomberg Intelligence weighing in saying that those extra costs probably won't affect the 2026 estimates because they do have solid revenue that most exceeded expectations, and credit metrics are also in line with forecasts.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.